Oh, I'm happy to be with you, Melissa. Thank you for inviting me. You know the traders, and I were talking here on the desk about Tesla and how your B case for Tesla is $1,400. A share guy here said he'd take 1,400 CU. That's still pretty bullish. Well, what is in, let's just even say, the bear case? What assumptions are made about its business to get to that 1,400 by 27 number? Well, about a third of our valuation is associated with elect vehicles, EVs, and scaling them. And as you mentioned, Turkey, a plant there. Many countries do want a Tesla plant because this is the new world, right? So that's good. This is all working out. And then 2/3 of our valuation is around autonomous and autonomous taxi platforms. Well, if you've watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading a Tesla at the margin so up when it is a soaring, and everybody's excited about the good news as we move towards electric vehicles. We will take profits, and likewise, as investors and traders begin to fear that we're going to be in an air pocket. We've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric. And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down okay. In price, Tesla can price down. It can price down if we're in a weak spot globally. And it does appear that we are certainly China and Europe. And even here in the United by Tesla now, it's Cathie Wood's last warning. Yes, you did hear correctly. With her history of seeing trends before they become mainstream, visionary investor Cathie Wood is sounding the alarm, and we're here to explore the ramifications of her most recent warning. Her vision has altered the future of investment methods. When Cathie says something, investors pay attention because her words have a lot of weight in the financial industry. In this episode, we'll analyze Cathie's pessimistic forecast and consider what it implies for the stock market. We'll explore every aspect of Tesla and innovation in general, from the possible dangers of a market slump to the exceptional opportunities brought about by Tesla's groundbreaking technologies. But before we do, please click the like button and subscribe to our channel. Welcome to Tesla Stock News. Let's begin with the last few years. Although Elon Musk's Tesla, the electric vehicle juggernaut, has always been focused on revolutionizing transportation with its sleek electric cars, the company has also been quietly developing its own artificial intelligence, AI, technology to augment its vehicle capabilities. Tesla has been making waves not only in the automotive industry, but also in the field of AI. The development of Tesla's own custom AI chip, dubbed the full self-driving computer, is one of the company's most significant moves in this regard. This chip powers Tesla's autopilot and full self-driving features, allowing its vehicles to navigate roads autonomously with a level of precision and reliability that sets them apart from the competition. However, what distinguishes Tesla's approach to AI from that of other industry players, like NVIDIA, is that it integrates AI directly into its vehicle hardware, whereas traditional automakers rely on off-the-shelf AI chips from companies like NVIDIA to power their autonomous driving systems. Tesla has chosen a different path by creating and manufacturing its own AI hardware in-house. By utilizing its knowledge of both hardware and software, the company has gained a competitive edge in the race towards fully autonomous vehicles. This strategic move gives Tesla complete control over the development and optimization of its AI algorithms. Tesla has successfully merged its AI technology with its line of electric cars, making it possible for self-driving cars to become a reality in the future. But Tesla's AI efforts go beyond autonomous driving. The company has applied AI to other aspects of its operations, including energy management and the production of automobiles. What does all of this mean for investors? Well, in short, Tesla's foray into AI represents a significant opportunity for growth and innovation. By investing in Tesla, investors are not just buying into a car company. Rather, they are investing in a future where AI-powered technologies will revolutionize transportation energy. Beyond this, it's a golden opportunity, as Cathie keeps preaching and speaking of seizing opportunities. Tesla's AI algorithms are used to optimize the performance of its energy storage products, such as the Powerwall and Powerpack, by intelligently managing energy usage and storage based on real-time data and user preferences. You should definitely take a look. What this indicates about Tesla's remarkable growth. It's not enough for Tesla supporters and those with a keen eye to spot the next stock market jewel to simply watch from the sidelines. Your one-stop store for the most recent information on Tesla is Seeking Alpha. Targets for Tesla stock price innovation from Tesla and everything must go on. The internet's top source for professional Tesla news is Seeking Alpha. Go past the mainstream media's anti-Tesla rhetoric and focus on the facts. Visit the description's link to receive a unique discount. Now, while many people anticipate a smooth transition, let's examine another viewpoint. A voice warns of a potentially harsher descent upon landing. Innovation frequently results in deflation. Take Elon Musk, for example. He has consistently pledged to lower prices in line with cost reductions, and his price reductions aren't necessarily due to a decline in demand, but rather to his large profit margin relative to others in the automotive industry. It's the innovation cycle in action. Speaking of innovation, there's a flurry of it going on at the same time on several fronts. Think about the 5 platforms that are changing the world with multi-sequencing. Automation, artificial intelligence, energy storage, and drivetrain technology are all substantially lowering their costs, increasing their count and accessibility. Let's examine DNA sequencing in more detail. Kathy studied the technological advancements and claims that with every doubling in the quantity of human genomes sequenced, comparable industrial breakthroughs have resulted in significant cost savings. The cost of robotics is doubling every 2 years, revolutionizing manufacturing processes. Don't forget about AI and energy storage, where costs are also rapidly declining. However, some people still believe the opposite, so it's all a matter of perspective. Although chips may appear more expensive, their increased capabilities far outweigh the increase in cost. The force of invention at work is what propels advancement continuously. While NVIDIA may have been the poster child for AI chips, Kathy went on to explain that Tesla's entry into the market signals a new era of competition and innovation. As costs continue to decline on various technological fronts, the possibilities for the future are endless, so buckle up, viewers. The ride is just getting started. In our Big Ideas 2023 report, our chief futurist, Brett Winton, emphasizes the critical role that artificial intelligence will play in driving innovation. Think of artificial intelligence as a catalyst fueling growth across various sectors. Similar to the symbiotic relationship between wireless and the internet, which was exemplified by the launch of the iPhone, but let's address the elephant in the room: NVIDIA and the broader AI landscape. It's interesting to note that, unlike in the early days of the internet, when there were many skeptics, the importance of AI remains undisputed. This universal recognition parallels the game-changing debut of the iPhone, from identifying NVIDIA's potential back in 2014 to the current AI frenzy. It's clear that investing trends have evolved today, with many opportunities present, some of which reaping substantial returns through ventures like limited edition Tesla models, when Tasha Keeney, the analyst for Kathy, brought up Plus for autonomous cars. I was puzzled what Kathy asked. Her response was a confident yep. She foresaw Plus as the brains or central nervous system of autonomous vehicles, a parallel processing powerhouse capable of handling multiple operations, simultaneously taking in data from various sensors like SARAs and radar, much like the complex world of video games. Back then, NVIDIA's stock was at a modest $5. But oh how it soared. It became a top holding not just in our ICU, but also in our Autonomous Technology and Robotics Fund. Why? Well, because robotics, including autonomous vehicles, are essentially robots, and as the robotics movement gained momentum, NVIDIA stood at the forefront with visionary leadership, deep domain expertise, and a keen focus on artificial intelligence. But what truly set winners apart from losers in this space, it boiled down to one crucial factor: access to vast pools of high-quality proprietary data. And Tesla, well, they had that in spades. Apparent withdrawal from the stock is like Tom Brady not winning the Stanley Cup. This narrative is both